The ambassador to Canada says his country is interested in stepping up trade with Canada while criticizing the U.S. trade war for hurting the global economy. The ambassador made the comment during an event at China's embassy in Ottawa. The ambassador pointing out that China's trade volume with Canada keeps going up.
China has now started to import record amounts of oil from Canada. And this is because the US is still slapping 150% tariffs on China, and China's retaliating with the same. So seeing China turn to Canada for that precious liquid gold is not a massive surprise.
Overnight, more than 11 million barrels of Canadian oil headed for American refineries simply vanished from the shipping schedule. Gas prices at the pumps soared past $5. Grocery stores hiked up costs on anything that traveled by truck, which suddenly needed pricier fuel. Politicians scrambled for answers, but there was no official statement from Ottawa, just a deafening silence. Eventually, a single remark filtered out. This wasn't just an expired contract, it was a full-scale betrayal. March 5th, 2025 brought another blow. China slapped a 100% tariff on Canadian canola oil after accusing Canadian producers of unfair trade practices.
China could spell trouble for canola farmers here. Beijing implementing retaliatory tariffs on select Canadian farm imports in response to Canadian duties against Chinese electric vehicles.
Ironically, that same day, Canadian officials hinted that the real pivot was toward massive energy deals with both China and India. These new partners offered billion-dollar, no-red-tape agreements, guaranteeing hundreds of thousands of barrels per day locked in for the long haul. The US was left asking, did we really think Canada would forever sit quietly, selling discount oil to keep us satisfied? Industry insiders publicly fumed. How could Washington miss all the signals? And how did we not see this crash coming until the mics were hot and the oil had already sailed away?
There's certain activity that we could have with China. We obviously do have a large amount of trade with them, but we have to be very careful, very deliberate, and they need to meet Canadian standards.
Over the past decade, Washington banked on open-door access to Canadian oil. That dream died the instant the Trans Mountain expansion flipped the switch. Now, instead of shipping crude via American pipelines, Canada pumps up to 890,000 barrels a day directly to its own Pacific ports. From there, tankers sail straight to Asia, bypassing every American route and regulation. The US no longer holds the keys to Canadian energy. In long-term deals with Beijing and New Delhi, Canada hammered out 15-year contracts that made their pivot unmistakable. No more waiting for the White House to sign off on cross-border corridors. Adding to the sting, experts point out that Canada's upcoming liquefied natural gas ventures, like the LNG Canada project set to begin exports by mid-2025, are driving the final nail in America's energy advantage. Drillers and shipping executives see this as a game changer. Canada doesn't ask permission anymore, certainly not from the US. The White House can't impose its will when the oil or gas is loaded onto tankers in British Columbia, bound for foreign ports. Suddenly, our northern neighbor is a global power broker, racking up higher profit margins and building new trade alliances. Is this the moment the US lost its energy edge for good? Over the past few administrations, trade disputes chipped away at the foundation of US-Canada relations. Tariffs on steel and dairy, auto parts, and produce. Each volley eroded mutual trust. Then came the turning point. Old grudges reignited under the banner of America First. Instead of stabilizing the energy partnership, the White House fueled animosity, reimposing tariffs on Canadian metals and threatening more duties on agricultural products. Officials in Ottawa had enough. They quietly crafted plans with Asia and other non-Western markets, signaling a new era. If the US insisted on punishing them, Canada would do business elsewhere. When Canada halted shipments, American truckers felt the shock first. Diesel prices soared. Producers, from Midwestern farmers to coastal fishers, saw their shipping costs climb. Confidence in Washington's ability to prevent an economic firestorm began to wane. Suddenly, top economists whispered about a possible 0.8% GDP drop, enough to threaten recession by the second quarter of 2025. Was there a moment when this relationship could have been saved? Or had we just been sleeping through warning sign after warning sign, blissfully unaware that our biggest energy cushion was about to pull the plug. The oil world has moved on from the comfortable days of US-centric pricing. More than 20% of global oil trades no longer even require American currency, a trend that accelerated once Canada shifted its loyalty elsewhere. Now, much of Canada's energy is sold under yen, yuan, or even potential gold-backed systems championed by nations hungry for dollar alternatives. And here's the kicker. It's not just countries like China and Russia who are eager to bypass US financial gatekeepers. India, thanks to robust ties with new suppliers, is more open to new payment methods. With Canada now contributing to those transactions, the message to Washington becomes painfully clear. Nobody is waiting for the US to bless these deals. That changes everything the American economy counted on for decades. Sure, the dollar is still a global heavyweight, but it's no longer guaranteed top billing if major oil exporters decide alternative alliances will yield better returns. Could this mark the start of a post-dollar world order? Or at least a world where the petrodollar no longer dictates the rhythm of global trade? Those whispered questions are getting louder with each passing day.
Almost got the middle being squeezed. The dollar is weak and emerging markets are weak, which, as I said, is unprecedented.
Trump's 150% tariff threat, bold move or final straw? That line shot across headlines when the White House announced a fresh wave of duties aimed at BRICS nations in an attempt to force renegotiations. For a president determined to defend American interests, it looked like a final attempt to strong-arm the global economy. Yet the immediate market reaction was brutal. Tech and energy stocks went into freefall. Investors saw these threats as an admission of weakness rather than a show of strength. If the rest of the world is forging new alliances, exactly who was the US expecting to scare back into compliance? Meanwhile, a swirl of propaganda about Canadian dairy and farmland lit up the airwaves. Radio and television talk shows claimed Canada was dumping cheap products and ignoring import quotas. But the data told a different story. American buyers hadn't come close to exceeding Canada's import caps, so the outrage looked more like a staged performance than a fact-based grievance. That truth didn't matter, the narrative did. Rallying rural communities around fear and patriotism proved an effective headline grabber. Yet behind the scenes, the wedge between once friendly neighbors continued to grow deeper, undermining any possibility of a diplomatic reset. As if to twist the knife further, Canada froze electric vehicle rebates, an abrupt policy shift that stung Tesla investors. Over 43 million Canadian dollars in incentives just disappeared, leaving prospective EV buyers in limbo. It wasn't just a bookkeeping maneuver, it was a message. When you burn bridges, you lose out on more than a pipeline. Nervous chatter spread. Would Canada target other US tech giants next? Could Ottawa block joint research on emerging clean tech? Suddenly, the ripple effect was real and personal. Families that had counted on those subsidies found themselves stuck. Meanwhile, American consumers coped with finances on fire. Gas prices hovered around $5.25 a gallon. Steel costs soared by over 20%, and groceries inched up weekly. Many families canceled road trips just to keep the lights on. Factory owners from Ohio to Kentucky begrudgingly shuttered production lines. Some blamed material shortages. Others watched shipping and energy bills rising too fast to stay profitable. The chain reaction was unstoppable. Higher costs, fewer sales, layoffs, and more Americans worried about losing their homes. Is this a temporary crisis or the beginning of permanent damage to the nation's industrial heartbeat? By now, Canada's transformation into a global energy titan is impossible to ignore. The Trans Mountain expansion, spinning at full capacity, funnels nearly 900,000 barrels daily to vessels bound for Asia and Europe. Pair that with the upcoming LNG Canada project, launching shipments in mid-2025, and you've got a pipeline network that effectively treats US territory like a scenic detour, not a necessity. For the first time, Canada can steer its oil and gas exports without tipping its hat to Washington. European capitals, meanwhile, celebrate these Canadian cargoes as an alternative to Russian energy, cheering the injection of stable resources into a bleak market. As winter sets in, leaders overseas tout new Canadian shipments as proof they're prepared for future shortages. Yet in the Northeast US, the mood is grim. High tension lines flicker under the strain of record demand, while blackouts loom on the horizon. Factories are closing, lights are going out. Did America walk into its own energy grave? That question roared through the media when the Dow nosedived 1,000 points in a single day. Traders bailed on American equities, convinced that the energy shortage wasn't just a fluke of policy, but a systemic unraveling of ties with our largest neighbor and supplier. Hedge fund managers admitted they'd never seen such a swift collapse of investor faith. For them, this loss of global confidence felt like stepping off a cliff without a safety net. As if to punctuate that crisis, factories in Michigan, Ohio, and Kentucky turned off their machines. Owners pointed to raw material costs rocketing by 30% in under a month. Some blamed truck fleets that couldn't afford to operate at these fuel prices. Others quietly admitted that foreign capital was fleeing, leaving no cash to keep production lines staffed. Each time a politician declared victory or promised a quick turnaround, another company filed for bankruptcy protection. Lurking behind the headlines was the stark fear that the US economy teetered on the edge of a deep recession. Would politicians double down on trade threats, or finally seek a compromise before more jobs disappeared? If nothing changes, rolling blackouts in the Northeast could serve as the darkest symbol yet. A once stalwart ally has cut off the lights, and the rest of the world has already moved on. For years, Canada was our safety net, our reliable backup that shielded us from global price shocks. Now, that safety net has become a driving force behind our instability. We can debate who's at fault or how we got here, but the stark reality remains. Neither side seems eager to rebuild what's been so thoroughly broken. And as new shipments sail west across the Pacific, America stands watching from the shoreline, realizing too late that the golden pipeline is gone.